This is the FFR Trading Market Minute. You're looking at a daily candlestick chart of the SPY. And, last week we had an upside target here that I had drawn, and you can see we gapped up. This was on Monday above that level. Well, what was resistance, all right, we're above it, now becomes support, and it came right down to that, which acted as support. At that point on the close here, you see that the RSI had now crossed back above its moving average, right? That is a bullish sign. If that high gets taken out, which it did on Tuesday, right, and we've gotten some follow through there. Now, having said that, you can see that the oscillator is overbought here. We've moved higher. We've kind of filled this little gap today from today's open to yesterday's close. So we'll see if we get some selling that comes in at some point here. We are overbought here. So this move may be, getting a little long in the tooth here. The tariff news is always a kind of a wild card, and that's really what produced a lot of this, with some of the positive deals that had happened and the delay on the tariffs with China and so on. But now that the market has retraced, if we go back here, after a crash, if the market retraces more than 60% of that down move, which it has now, we're well over 60%. This is the 66% or 0.66% retracement line here. There is a much higher probability now that we will see new highs before we see them test these lows again. So my thoughts are we may be out of the woods in terms of the this down move. I think the crash has happened, and I think we are not that saying that we're not going to pull back here. I think we will, but not to the lows, not back to these lows. At least historically, there's a very low probability of that happening. So what am I looking for here this week? Well, like I said, I think we're getting overextended. We should start to either go sideways or to pull back. This, which was resistance, right? This is now support. So this would be the first pullback level. I think we've gotten quite a distance away from the 20-period moving average here, the black line. And again, when we talk about when the price gets too far away, it kind of snaps back to it, right? Gets too far away, snaps back to it. And same to the upside. When we get too far away, okay, it comes back to it. It gets too far away, it comes back to it. So I think the 20 period will continue to rise, and this is probably going to try to meet it. If we get below this support, you got a gap to fill below the market here. Right, this is another level right here of downside target if we start to roll over here. And then I'll say the 20-period moving average. I'll remove this here. There's still this little open gap down here. Maybe I'll leave that on. It'll probably coincide with the 20-period here shortly after a few days of activity have gone by here. All right. So again, if you're long the market here, start protecting your profit to the long side. We've gotten a little overextended. We don't have divergence up here or anything, so it could push higher on some more positive news and whatnot. But overall, I think the danger that we retest the lows is probably coming off the table. Higher probability of maybe potential new highs at some point. But like I said, probably ready for some type of corrective action here. You've got a target here and a gap fill back here, smaller gap fill back here, and then your 20-period moving average there. Economic data set for next week. We'll start with some Fed speakers early in the week, but really get into the meat of the economic data on Thursday with initial jobless claims. We've got S&P Global and Services PMI, existing home sales, and Friday's new home sales. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.